What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is May 23rd of 2022. Well, folks, I hope you're having a fantastic start to your week wherever you are, and in today's video, I want to go out on a limb and make a bold claim about the crypto markets, especially as sentiment is incredibly fearful right now. And that is that right here, right now, no matter if you believe that we have further to go down in price in the preceding months, that we are in a bear market, or that you feel that the recent correction was the bottom, right here, right now, it is much more likely than not that we are going to see a significant rally in price, recovering a lot of the losses, then continuing down to the downside. And it has to do with a very simple means of analyzing long-term historical trends in Bitcoin's price, which we're going to go through here in today's video. And it's going to take in a lot of interesting factors about the market that are important to understand. So if you guys happen to enjoy this video, consider dropping a like, consider subscribing, hitting the bell icon if you haven't already, and leave a comment down below whether or not you agree or disagree with the content. I'm open to all opinions here on the channel. Now, I want to go ahead and kick things off here, guys. The first thing you all probably know about is that I like to focus on price action. I like to do naked trading, looking at support and resistance, and there's already enough of an argument to be made that we're down here towards the lower band range of a channel that's generally been holding since back here in December 2020. Some would argue that that's been broken here. And all the while, again, we can debate and talk about that. It's really not what I want to chat about here today. I want to chat about something that is still here on this chart, but doesn't have to do with price action. It's right under our noses, and it is the volume chart. Now, I understand a lot of you might be confused. Nick, why does volume matter? Volume's just how much Bitcoin was being traded on that day. Well, if we take a look back at history, and this is again why I put aside labels in the market about bear markets, corrections, whatever, right? It doesn't matter what you call it. When you find the optimal scenario to go long or continue holding your position and not FUD out of the market at the lows, right? Just where price is about to rebound, that's what I'm looking for here as a trader. I want to know if the conditions are favorable for me to walk off on my positions to sell on the market or be buying or hold out. Well, I'm going to show you all how volume here has served as a pivotal indicator to signal market reversals, both in bear market bottoms as well as mid-cycle corrections. Now, as with anything, it's not always the case, but it has showcased a lot of value over the past, not only cycle, but also since the last bear market. Let's go ahead and take a look here at the recent pullback. And I like to analyze this at a minimum here on the weekly. I think it's the perfect sweet spot here because if you start looking in monthly time frames or you start looking in daily or hourly time frames, you can get a little bit lost. The weekly time frame gives us a very good overview of when throughout history there were capitulation events, that there were major liquidation events in the market that effectively led to spikes in volume and therefore a significant decline in price. Now, you all know that I have beaten like a dead horse, I've rambled on, and I probably annoy some of you guys sometimes about this, that this market is driven by credit. It is driven by leverage. A lot of the major moves upward and downward are caused by long-term players in the market who are taking on a little too much risk than they should. And that has led to the exacerbated rallies in price and recoveries in the market and all the new all-time highs that we've set, but it's also played a role in these sharp 50% around corrections that we've seen throughout this cycle many times before. 3 times, in fact, since back here in April 2021, just a little over a year ago, 50% plus corrections. Well, let's go ahead and take a look at what's been true many of those times. We've seen here, for example, in May that we had a week of over 450,000 Bitcoin traded across a lot of the leading liquid exchanges here. Major breakaway candle from the general trend that was around 200,000 Bitcoin per week. We can see here on May 17th of 2021. This week not only led towards a similar type of correction here, right? If we really view it in the percentage terms from top to bottom here, 26% correction. Let's take a look here from top to bottom, 38% correction. These heavy corrections in price are followed in with a lot of trading volume. We went from around 163 to 200, and you guys can follow it here on the left-hand side, right? That upper 150 to 200K Bitcoin per week, all the way up to an accelerated 622,000, right? setting in a temporary low here, and all the while we consolidated afterwards, price didn't really discover new lower price range. It started to trend up higher after sideways consolidation. And we can see the same here during the March 2020 sell-off, going from around 150,000 Bitcoin traded on average per week, all the way up to 741,000 Bitcoin. And then this is again across the liquid exchanges, the all-time history index for Bitcoin. And we can see that this is not just true here in the short term, it's been true through also the past couple of years, even during bear markets, right? You've got the capitulation candle, again, another 30% weekly downturn after already going down 12.5% before. The acceleration in volume, top temporarily in volume weeks after in this case, right? Especially as you can see afterwards, the weekly candles don't even come close. They start to charter downwards. We saw the same here as well during the capitulation candle here in February 2018, where Bitcoin's price went down to 6,000 and did a near 100% rebound up towards around 11, 12,000. We can see this is again the same case here for the bear market lows in January 2015 or during the mid-cycle correction here back in April 2013. This was the lowest price point. Even though we pulled back afterwards, we never revisited back below that range. So what's my point in all of this? You can see time and time again with these events here, they are not only stand out in the sense when they're compared to the previous volume candles from the previous months or the past year before that candle, but on top of that as well, afterwards we don't see any similar candles afterwards. We see a general decline back in volume, a normalization of volume, where we are not seeing that kind of heightened volume. Now, why might that be the case? Is it just that people are scared during those periods of time, that there's more trading activity? Traders do like volatility. That's definitely a part of it. But the biggest reason for it, especially as we've seen throughout this cycle, and why we're seeing more frequency, and you can just see this here going back through history, more frequency of these kind of deviations in volume. And the reason for this has to do with the fact that we are a market that is driven right now, whether we like it or not, by this credit and leverage in the system. And all the while, on the green days, it's great to be leveraged long because you're making more and more returns. When Bitcoin's up 300%, you might be up 3,000% because you're 10x leverage, right? Sounds great on paper, but unfortunately, people get greedy. They keep drinking from the punch bowl. And when it spills over, when the party's over, those same longs that drove up the market with all that credit and all that borrowed stablecoin liquidity will start to get liquidated. Their positions get knocked down. And it gets forced into these kind of domino effect sell side patterns that we've seen here, just like we saw over here back in May or back here in the previous May correction, right? History is repeating, interestingly enough, at similar times. The key point I want to drive here is this, guys, that exchanges, the big players, those who are using the Wyckoff distribution patterns at their whim to knock you out of your positions, whether you like it or not, whether you're emotionally selling out of your position or you're getting forced out because you were over leveraged, you were overexposed. They want you to panic into a break on support. They want you to panic sell, fill in their limit orders, and get them set for the next move higher. And once that sell side pressure is drained out of the market, they start taking prices up higher again. They get you to FOMO back at higher prices, get leveraged in. Trust me, I can tell you guys this. If you want to know who runs the industry at the end of the day, right? The people, with the strings at the tip of their fingers, right? If you really want to put it that way. The thing is, you can call it market manipulation all you want and stuff and kind of batter at the market and yell at it. Really, they're using time-tested tactics they know will manipulate you out of your positions. And I can promise you all, exchanges, lending platforms, all these other players out there in the market, they love nothing more than for you to be overexposed and get liquidated out of your position. Hands down. It's how a lot of exchanges make money. All these futures platforms and derivatives platforms, and also the people giving you the referral links to trade on those platforms, that's how they make money. They make a ton of money off of it, whether they will tell you or not. It is a part of their business model. It's how they make profit. So we need to understand how the market can abuse our emotions like that. And we have to learn how to counter against our emotions, to trade the opposite way, to think about market assets like Bitcoin like we would a good at a store. We want to buy into a discount. And the big point here I really want to drive home here is this, that I'm not saying that market prices are going to go vertical here in the next few days, right? For example, the correction back here in May of 2021, we saw practically 2 months of sideways price action, and then we started to drive higher in price and set new all-time highs. Same back here in March, right? It took us a long period of time to recover that, right? And that even still wasn't an explosive rebound. It was just making up for previous losses here, right? And then even here, back at the bottom of the bear market back in November 2018, right? Yeah, we didn't set in the absolute low here, but generally speaking, we pretty much tracked sideways, and it took a good practically 2 quarters here in order to start actually trending higher like we did back here in April 2019. I remember it very well, right? You have to be patient sometimes. But the key point I'm driving in all of this is that it's not time to FUD out of the market. Now, we can see here overall again that we have the ETH to BTC ratio, which has started to recover. It's been holding that support, and it's been holding at this support for a long period of time. I do want to make one key separation here. All the while, ETH has been continuing to hold strong here against Bitcoin. And as much as I'm excited for the upcoming upgrades to the network, when we're focusing on Bitcoin here, guys, in the volume metric, I don't know if I can be as confident in saying the same for Ethereum and other plays in the market. All the while, Bitcoin might be coming up and starting to rebound in price, we may not expect the same kind of resiliency in altcoins. It's one important tidbit to share here. Now, one thing I do want to emphasize here, guys, if you're a long-term crypto holder here in this case, if you're buying the dip, if you're holding out here and you're looking to put your crypto to work, one way that you can do that is through Celsius, one of our long-term partners here on the channel, today's sponsor for the video. Now, you guys probably know about Celsius. We've been following them as far back as 2018, but a big fan of Alex Majinsky and many other people at the Celsius team who have been aiming to bring those who are eligible participants, in this case accredited investors, the ability to earn yield on their crypto assets. And Celsius is working towards bringing a whopping 100 assets to the platform. It's already got dozens of popular cryptocurrencies that you can earn yield on. And on top of that as well, if you guys ever are going to consider here in this case getting onto a crypto platform and trying to get access to more things other than just buying crypto, you've not only got the yield service here, but you've also got a whole range of different services coming down the pipeline. You can borrow against your crypto, and on top of that as well, utilize the swaps feature to swap from one crypto to another if you want to go from Bitcoin or altcoins to Bitcoin. And on top of that as well, the Celsius credit card, which you can join the waitlist for. We've got a link down below in the description where you guys can learn more about it if that's of interest to you. So if you guys want to support the channel, it's a great way to. And I've been a long time user personally of Celsius. I can attest to the platform, used it a lot since 2018, and I think it's going to be a great platform for you to consider using as well if you're looking to start your crypto journey. Now, one big thing here I want to do, continuing on to this conversation here, guys, about the emotions here. And I really love this chart here, you know, the fear and greed index overall. It's not an absolute bottom or top caller, but prolonged greed and prolonged fear on this index, just like the fear and greed index and traditional equities, is an incredibly valuable reality check to help you step back and realize whether or not the market is being too bearish, too fearful for the time being. And again, I've heard some people bring up this again overall for the fear and greed index that again, yeah, the fear and greed index can sometimes drag on here. It can have multiple retests down here towards the fear range like we did in the previous bear market back in 2018. But what this chart doesn't show you here, and what many people don't focus on here, is that you do not want to sell into the absolute fear and greed, which was around $6,000 to $7,000, because each and every time we have some kind of rebound here, right? We didn't just hold down in fear for a long period of time. We'd have rebounds. And if you go back again, like we talked about previously, when we first came down to 6K, we rebounded all the way up to 12,000. We made a 100% move. That'd be great if the existing portfolio you have right now, you could sell at a 50 or 100% higher level. I'm not guaranteeing that that's going to happen, but historically, selling into dramatic fear, into these capitulation candles, is one of the worst things you can do. Wait for some kind of rebound, even if you're convinced that it's a bear market. And that's the point that I always try to drive here, guys, is just not to get caught up 2 steps behind in your positions. Because not only do we know that these are the kind of distribution patterns that long-term large investors use to their benefit to scoop up positions in the market and fill their bids, their limits on their bids on the order book. On top of that, we can just simply take a look at the on-chain metrics. For the first time really since back here Honestly, we technically were even seeing a decline here, right? So at this period of time, when we were moving up here in Bitcoin's price, in the first quarter of 2021, we saw distribution. We saw the whales who were holding more than 10,000 or more Bitcoin and their wallet addresses starting to lower their positions, sell into the optimism of the market. And since then, we've been riding sideways here for the most part of 2021 and the first part of 2022. But something really interesting started to happen here, going from February to April. During this sell side event, there have been actually a growing number of wallet addresses with more than 10,000 Bitcoin or more. It's kind of the opposite of what we would think, right? We would think in this case with price coming down, we think, oh my God, the whales must be selling off. They must be really dumping their positions. When in reality, the OnChain metrics don't lie. We've seen about a 10 wallet expansion here from back here in March. We're at 85 wallets that had more than 10,000 or more BTC, now going up towards 95 on the metric. The highest point we've seen since back here in March of 2021, over a year ago. And on top of that as well, if you're not really just concerned about the whales, let's just take a look at total Bitcoin. Around 64% of all Bitcoin has not moved in over a year. Nearly 2/3 of the network. And every single time we come up and set in these new highs and we trend higher in this, just like we did in October and September of 2020, and like we did during the bear market lows here, right, during this capitulation final phase here back in 2015, or even here in 2018, right, the acceleration and the supply shortage of the market that isn't moving around, that isn't on the order books, that's a long-term or at least swing trade position for larger players who have a much higher price target in mind. These have been the signs that signal market reversals. And again, I don't want to go completely out of the question that, yeah, maybe we bounce up in price and then we roll back over to some degree. Yeah, that could happen, all right? I'll admit to that. That could definitely happen. But the key thing to understand here is that it's not the time to sell. Now again, as we emphasized back a couple videos ago, actually for a couple of videos, if you guys are really overexposed, you're losing sleep, in this case about the market, and you can't afford to lose anymore, there's nothing wrong with taking chips off the table. We've said this repeatedly on the channel. But what I'm trying to propose here is a way of viewing things that, hey, if you have money in this case with a 10-year or even 5-year time horizon, right? If you really have the long-term picture here, this is not the time to panic sell out of your positions. And I can speak with my actions, guys. I'm not running for the hills with all my crypto. I'm definitely considering maybe in the preceding months during one of these rebounds to maybe de-risk a little bit, right? But I'm making sure I'm not getting caught 2 steps behind here in the absolute fear, right? That's a very key difference, an important point to keep in mind, guys. So again, although it is not some foolproof indicator, hands down, nothing is foolproof. This has been a very important and consistent model here, and understanding trend reversals in the market. So it's something that you guys can use in your arsenal. Use a variety of different metrics, from naked trading, watching what price is telling us, watching again what the market order flow is telling us. This is again another key sign here. We're taking a look at Bookmap here, just continuing this trend here for the last week in positive upward market order flow volume. There's not a red dot in sight. It's all green here. Institutions, the large players, they're taking this opportunity to buy. And if we can learn to listen to all these different signs, if we can learn to stomach the volatility, stomach the chop in the market, and realize that probably the worst, at least here in the near term, is beyond us, that we just have to wait a little while for greener pastures, we're going to be in a much better position off for it. At least that's what I've learned throughout history, through all the mistakes and all the great decisions I've made as well in financial markets over the last 10 years. Don't get caught 2 steps behind. Don't let your emotions get the best of you. Because the composite man, Mr. Market, who is pulling the strings, really leading to the effects of where price goes, wants nothing more than you to think with emotions. And we have to do the opposite of what Mr. Market really wants. Anyways, I love this kind of analogies and stuff, but it's very true, and it's important to understand here that there are other people on the side of every trade that you make. Always remember that. Anyways, guys, if you enjoyed this video, if you found it to be valuable, consider dropping a like, consider subscribing, hitting that bell icon, and whether or not you agree or disagree with me, I want to hear from you guys in the comments down below. It's a really fun video to make. I enjoy being here as always with you guys. Thank you for giving me some time to ramble on. And until the next video, I'll see you on the next one. Take care, everyone.